Hello, it is Saturday, March 7, and I have finally uh, marked the Wednesday, March 4 charts that where QQQ really did a number on me. Um, that day was a difficult trading day emotionally, but I wanted to treat this as tuition and learn from the mistakes I made rather than avoid looking the chart. So I came back today, marked up the chart, and analyzed what actually happened. So coming into the open, I had a bullish bias because pre-market was trading above the previous day high and momentum looked strong. In addition, ADP employment numbers came in stronger, which, reinforced my belief that the market could continue higher. So my expectation was that buyers would continue pushing the market upward after the open. So I focused on Q because I liked, the pre-market, how it was looking pre-market. So my first trade was the result of being too trigger happy at the open. I saw an immediate break, an immediate retest of the pre-market high, and then a confirmation candle. So uh, I entered late here. And after the expansion move had already occurred. So shortly after entering, the price rejected the 5-minute high and I was stopped out. So looking back, I realized I should not be entering trades right at the open. That was one of my cardinal rules. Uh, I I need to let the market digest overnight positioning and and the news, the pre-market news. So yeah, that resulted in a loss. Um, my second trade was even worse, more impulsive, and I chased the break of the 5-minute high without even waiting for a proper retest. So here, the 5-minute high rejected and it never closed. I couldn't say that this is a reclaim of the 5-minute high. And but I entered, and of course, I got stopped out immediately. This was a clear violation of my process. Instead of waiting for structure, I allowed FOMO to influence my decision. So it failed again, and I was stopped out quickly. My third trade was actually the setup that matched my strategy the most. So, I love entering on reclaims. And so this was a reclaim of the 5-minute high. Um, I entered here, I placed my stop loss at the 5-minute high, and shortly after entering, the price consolidated, and I got freaked out by this bearish candle that wicked my stop loss but didn't close below my stop loss. But at this point I was already already compromised from the previous losses and I exited early because I was afraid of another stop out. So unfortunately, that candle was the noise, and the following candles pushed strongly upward. Look at this. This is like, this really killed me watching it. Um, and it eventually reached my target of a 2-to-1 risk to reward ratio. And not only that, it was about a 5-to-1 risk to reward. But you know what? My emotional state already caused me to abandon the plan. So this chart clearly shows that my market thesis was not wrong. It was right. It worked out. It was just that, I was trading either too early at the open, chasing the breakouts, and then not honoring my stop loss because I was already affected by, by these losses. So my takeaway from today is that the first 10, I really shouldn't be trading in the first 10 minutes of the market because it's deceptive. That's really where, I'm seeing now where liquidity sweeps and traps often occur, at the open. So I need to really give the market time. I need to let it show its hand, which is, my rule rather than being just too trigger happy. And yeah, I was just so frustrated that day. But doing this review helps me see that, my losses were really discipline and not a failure to read the market. So that was good. That was good that I think I can read the market. And yeah, but it gave me feedback on my process and that I should not avoid mistakes and just kind of sweep it under the rug, which is what I typically want to do. Uh, but I need to use them, recognize them, document them, and improve from them. So, yeah, that's my QQQ losses. That's it.